Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 18th of February, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the fourth week of February. Let's take a look at spot gold, and it started bearish throughout the week until the Friday, where it managed to pull back up slightly. And it has finally fallen below the daily 55 EMA and the 1850 level, and this long-term trend line from all the way back from February of 2 years ago, and that has closed below that trend line now on a week, and still looking bearish and looking to target the next key support zone at the 1800, where the weekly 55 EMA is at as well. Back to the daily time frame. So it started off bearish on the Monday, pause with doji on Tuesday, and then bearish again on Wednesday, pause on Thursday. Continue to dip lower on Friday until the US session, where it managed to recover and pull back higher, and largely driven by the US CPI figure on Tuesday, where it came out worse than expected. In fact, which is higher than expected, which means that the Fed may likely continue its interest rate hike and could even be a higher quantum again at 0.5, and either that or could be further rate hikes for a couple more months. So this caused further weakness in all the major pairs, and including spot gold. And then on Wednesday, retail sales figures came out higher than expected for the US. So that continued to drive the precious metal down. And on Thursday, the PPI also came out higher than expected, so which seems to support the CPI figure. So if we take a look on the 4-hour time frame, you can see that only during the US session then of Friday, and it managed to recover somewhat, but probably just to retest the trend line where it fell from. So for the week, like we saw, it is still looking bearish, and this intermediate zone, let's remove this. The 1850 now is now an interim resistance zone. Along with the 21-Fib retracement above that. And below that, the critical support areas, support zone actually, that's the 1800, where the daily 200 EMA is rising up to, and as well as the 50-Fib retracement area, that's at the 1788. So this whole zone from 1788 to 1800, that's a key support zone. And this week it'll be driven by the US PC price index, which we'll see if it's going to be similar to the CPI figure, with could be slightly higher than expected. So this could climb up to retest, and then it could still break down and test the key round figure at the 1800. It needs to climb back up above 1860 and 1870 area to recover. Otherwise, it's in danger of turning bearish, turning more bearish. Okay, let's compare this with the US dollar index, the DXY, to see whether that has risen and broken up higher. Now here's the US dollar index, the DXY. And let me expand this slightly. And initially, it started with a bearish move on the Monday and was dipping lower back down to the 38-Feb retracement, and until the UsdJpy data came out and it was higher than expected. This gave support and US dollar managed to bounce back up. Continued on Wednesday with better than expected retail sales figures, and on Thursday as well with the PPI. Continue to drive all the way higher until it hit the 78.6 retracement, and that's where it pulled back lower back to the daily 55 EMA. So it looks like it stayed neutral for the week. We switch to the weekly time frame, and it's sitting just below the actually right at the weekly 55 EMA. It's a doji, small spinning top, and still looking bullish. So it could still continue and test the 78.6 again. And if it's a really strong bounce, then it could eventually come up to retest the 105 round figure. So it depends on mainly the PC price index on the Friday towards the end of the week. And this is basically an inverse relationship with the other major pairs, and does contrast with them. Back to the daily time frame. So this interim resistance, we can move it up to the daily 200 and the 78.6 with retracement. Major resistance up at the 105 round figure. And we could move some of these support levels, move it up here, and the interim support at the 103, where the 50-Feb retracement is. Okay. So yeah, it was on its way down initially, but the better higher than expected the CPI figure drove it back up all the way until it hit the 76 retracement. Then ended up neutral for the week, just waiting for next week's news. See whether there's further evidence of a potential higher rate hike or an extended rate hikes for next couple of months. Okay, let's move back to the other major pairs. Let's move on to the dollar against Japanese yen, and we would expect it to be breaking out bullish, and it did break out on Wednesday, breaking through the daily 55 EMA and close above the daily 200 EMA. So that's a key support resistance zone, and climb up above the 62 Fib retracement to hit the 135 round figure before pulling back slightly for the week. So this is a critical bullish breakout. So this zone now is going to be an interim support at the 50 Fib retracement, and below that at the 130 round figure. That is now a key support zone. All right, and let's move this resistance now up to the 78.6 retracement level. And that's around the 136, yeah, just above around 136. And right above that, that's a critical swing high area. Okay, so after finding support and bouncing up above from the 130 support zone, it has continued to creep up and climb up higher to eventually hit the 135. Let's see whether it then can continue higher, probably pull back to retest next week before attempting to break through higher. And it's going to depend on mainly the PCE price index towards the end of the week. So let's see if it's in line with the US dollar index, the DXY, and able to recover from its recent lows. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.